Good day, traders. This is Stacy Burke from Stacy Burke Trading. Today we're going to be going over initial balance and part 5, end of day trading. These modules are all geared at not being one standalone method of analysis, but giving you some fundamental understanding of price action and price movement, and then incorporating those understandings into a tradable strategy. So initial balance is a concept that sort of originated from some of Toby Crable's writings and research, as well as Stottlemyre and Dalton in Market Profile. If you're not familiar with it, go and do some of their work. But essentially what that refers to is the opening range, and that's the first couple of bars in any given time frame have a high probability of potentially setting up one of the extremes for that session, whether it's a daily chart, 5-minute chart, an hourly chart. So in this particular case, when we apply that to the daily, there's a couple of concepts we look at Monday to Friday, but also on the monthly rotation. And today I'm going to be reviewing the initial balance on the monthly cycles of the daily charts. So just looking at the Canadian dollar here, I'm not going to go back too far. I'm going to go over a few different instruments, and then I'm going to let you go and do your own homework. But basically what we want to look at is the first couple of candles in any given month. So if we start back roughly in September 2016 Canadian dollar, we're just looking at the first two bars, and we want to call that our initial balance or the opening range. So our first two candles represent the initial trading range that's established by the market. Now, and again, what that potentially tells us is that not necessarily that one of those is going to be the high or the exact low of the month, but it gives us an idea potentially where buyers or sellers will dominate. And even though this was a range bound month for most of the month, we see that initial opening bar from the first day of the trading month held as a buying extreme for the month. Now I'm just going to keep this short and simple. We'll go month to month, and you can again look at your bars yourself on your own charts. In this particular case, we saw that second day of the trading month break out in October, and indeed that first bar of the month did hold as the high for the month. Now, interestingly enough, if we do a bar count, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 days in the trading month, on the 11th day, which was 50% of the month, we formed a low. So again, that's another video that will talk about time and price cycles. But again, you can see that the first bar of the month did hold as the extreme, as similar, just a little bit more of a momentum breakout and micro trend line all the way down into the low of the month. We go into November now, and again we have our inside bar, outside bar. So we take our outside bar, the market reversed on a bullish candle, broke out. And again, that reversal where bears were turned into bulls held as the low for the month. Go into the next month, our second candle. Dojis, dojis, dojis. When we're in dojis, we know we're into a trading range. And again, our second bar of the month, high and low, held as the buying extreme for the month. And the market rocketed upwards after having a breakout from the November range. We enter into January. I'm not going to count this little blip on the screen as the first day, but our first bar is obviously the spike. You can use December's last bar. Big bullish breakout, and again, the low for the month. So, starting to see a pattern here. The opening range is very important, and gain 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20 days. So after the 10th day, we saw the market form a top. Again, 50% levels in price and time. So again, we have our first two candles, and our second bar of the month for February holds as a selling extreme in an aggressive bear move down, and the market continued to auction down. So again, initial balance, we're looking at the first couple of candles for potentially setting up one of the extremes for the month. As you can see, if you are able to combine this with some of your other analysis, you can see how timing that correctly can set you up for sometimes a 3, 4, 5, 6, 7, 8 to 1 reward to risk. So again, go back, print off some charts on your own, do your own research. We're looking at the initial balance. Let's take oil, just take a look at oil. We'll just blank this out. So we're looking at oil, and again, just looking at the first couple candles of each month for a high and a low for our opening range. And again, we saw a range-bound market in September 2015. The market set a high and a low for the month and stayed sideways. We go into the next month. The market formed a high and a low and then broke out after the second day and continued to auction upwards to the previous month's highs. So again, not the high or the low for the month, but it definitely gave us an opportunity to trade with the trend to a final peak. Then when we entered into November, we saw the second day of the month form the high. So again, smart traders would have shorted the market where the bull stops were, with a fairly low risk, one ATR, and then again maybe 1, 2, 3 ATR at least, maybe 4 on that one. We go into December, first candle of the month, second candle breaks out. Again, never retested. The market continued to auction down. Now, some people out there might be thinking, well, I've picked a trending market. I haven't done anything. I've just brought up the most recent charts. You can do your own homework. We're looking at the first couple of candles. If the market breaks out on the second candle and you're with trend, maybe an opportunity there. Again, first candle. Broke out. Okay, so our range was tested, formed a new low, and is auctioned back up. So it'll be interesting to see what oil does as we approach the first few trading days of March. So again, first candle, second candle, second candle, first candle, first candle, first candle. So just coming back, reviewing that, we're looking at the opening range, the initial balance, first couple candles of any time frame. Now in this particular case, we can also maybe look at the Europe session. Now for me, during the Europe session, I look at the 2 a.m. to 5 a.m. candles, New York time. 2 a.m., 3 a.m. is my first two candles, which on my charts are the 9 a.m. and 10 a.m. candles. So if you were trading the London breakout, let's just take a quick look here. We got our first two candles. Okay, second candle. Market broke out on the 11 o'clock, and we know that 80% of the time that in the London session, one of those three candles will form the high or the low for the session. So if you understand some of these basic concepts, you can start to piece together some of your price action And again, incorporate that with your other analysis, however you're trading. This just may start to give you some bit of an edge in terms of looking for better entries for buying low and selling high. Again, this is just one component, but if you start to understand the initial balance, obviously you can combine that with some of your other technical analysis. But even on these shorter time frames, the market can give you some huge opportunities. So hope this video has been of some value to you traders. Just before we go, let's look at the S&P real quick. So again, just looking at opening range, we'll go back. We got our first two candles here. Okay. And again, looking for one of these candles to set up possibly a high or a low for the extreme. What you really need to understand is that if you went to a higher time frame, if we went to a monthly chart, okay, we're looking at a monthly chart here. I'll just clear this out. So if we went to a monthly chart, we're either going to have two types of candles: a trend candle, or a trend bar if you're using bar charts, or a doji, which is basically a trading range. So if we go down to our shorter time frames, okay, we're looking to capture these swings of momentum when the, and you can call this fundamental because the calendar renews and the new data, economic data rolls out. You can call it whatever you want. But again, there's a high probability that one of these two candles will potentially hold as an extreme for buying or selling for the month. Doesn't mean necessarily that, as we see in this example, that the market will not form an extreme midway or halfway, but it will initially set up for a drive that you could potentially capture and profit from. So, hope this video has been of value for you traders. As always, I appreciate your comments and feedback. I have been getting a ton of questions, and I appreciate that, and I will try to answer those and get them up into a question and answer format. Always value your feedback. I'm trying to constantly provide great content for everybody. And in the coming modules, I think you'll see how this all fits together. Have a great day, traders, and may the market go with you. Hi, traders. It's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.